Thank you for tuning in to the Mortgage Innovators Podcast. Before we get into today's episode, we want to remind you that the Mortgage Innovators Conference 2023 Innovators Unite will be held June 14th and 15th at the Hilton Anaheim. Sponsorship opportunities are now open, and if you want more information, head to mortgageinnovators.com/conference to keep up to date. Greetings and welcome to the Mortgage Innovators Podcast. I'm Margaret Chiavini with New Res Correspondent Lending, and we have a really neat episode today for you. I'm thrilled to be able to welcome Brendon, Weiss, and Amy Moses from EscrowTab. So welcome, Brendon and Amy.
Thank you for having us.
Thank you, Margaret. So great to be with you.
Yes, we love having you, Amy. So today's a really fun episode because it continues with the topics that we're all very interested in this year in particular, which is streamlining, being more beneficial. And so we're going to talk about streamlining the eClosing process and really the benefits of IPEN. And IPEN is the in-person electronic notarization. So let's kick it off by, what is IPEN?
Well, Margaret, first of all, I want to say you're ahead of a lot of people where they were last year when they didn't even know what IPEN was an acronym for. So congratulations on knowing that it's in-person electronic notarization. And the first question we always get is it RON? It is not RON, right? You hear a lot about remote online notarization. It is not that, because it is in person. You're actually sitting down at the closing table, just like you would if you're using, pen and paper, like a lot of traditional closings have been done. But everything is being signed electronically and notarized electronically. And Brendon can dive into some of the differences with IPEN as well.
Sure. So, the biggest thing with IPEN is that, and the way that we at EscrowTab particularly implement IPEN, is that we are not looking to disrupt the lender's current process. In fact, our focus has been allow the title company partners that they work with to provide the lenders with the eClosing that they've wanted, and the benefits and efficiencies that they get from eClosings, particularly making sure that documents are signed correctly the first time and getting all those documents back into their system much more quickly, so that they have the ability to fund that loan and get the efficiency out of that the speed of delivery. The other part is by not disrupting that process, i.e. allowing for that closing to happen in person, the loan officers, the realtors, the title companies are all very happy and accustomed to that experience, right? So lenders have kind of been conditioned to believe that they need to take this burden on their shoulders. They need to carry the cost of implementation and everything else. And we kind of shift that in a way that it's in person, it's used by the title companies in collaboration with the lenders. The second thing is really that with IPEN, because the laws of e-notarization have been on the books in most states for over 15 years, you can cover a larger portion of the lender's portfolio. So if you think of an IMB that's operating in 40 or 50 states, they have to go through this eligibility process to determine, will my investors accept it, and is it allowed in the state and county that I'm doing business? And we kind of take that off their shoulders largely by recognizing that IPEN is used in almost every single state, has laws on the books, with the exception of Massachusetts and Georgia. And then in a few other states, they're just implementing rules, whereas you have a larger gap of states that you can't use remote online notarization in, such as California. The third piece is just that the application is super flexible, and that's what lenders are looking for right now. And by the flexibility, I mean It can be used for HELOC. It can be used for loss mitigation. It can be used for origination. It can be used in branch. It can be used with mobile notaries, right? And I shouldn't just say can be, but is being used in all of those cases, at least for us right now. And IPEN itself kind of had been on the books for a while, like I mentioned, but almost fell asleep for years because there needed to be something that was super intuitive for everybody involved, right? Because a closing is not just a lender, it's not just a title company. You have the notary involved in this as well, right? And having something that is used by the notaries that's super intuitive so that when they're going through that loan process, they have confidence in using that technology for that process. It's really important for them, and it's really important. It's even more important for the consumer and the loan officer that wants to make sure that this deal closes and everybody's happy at the end of the day.
Perfect. Would it be fair to say, Brendon, that the IPEN is almost like the best of both worlds in that you get the personalization, you're not disrupting the process, and you still get the benefit of the electronic notarization?
100%. Yep.
Okay.
And depending on the platform that the IPEN platform that you're using, the lender can also receive the benefits of electronic notes if they are not doing electronic notes today. And that has been a big thing that Amy and I worked together on when we were both at MERS and carry forward today. And because lenders know that with e-notes, they can have their loans included in a securitization much faster. If they're an IMB, they might be spending less time on the line with the warehouse lender and saving money and having efficiency there. So being able to provide all of that as a service is really kind of what lenders have wanted, but just haven't had the time to implement and drive from within their organization. So we try to take that off their shoulders and give them an easy way to get the benefit.
Yeah, I really like what you're saying, Brendon, because that's been the challenge. Like with Ron, I know us as a correspondent investor, one of the challenges on the Ron side is you have to have a video. Someone has to store the video. Is the IPEN the same way, or because the person is physically there are no requirements like there are with the video with Ron?
Yeah, I mean, you hear that feedback about the video and having rights with different people that might walk into the video, or pictures of your grandchild on the mantle, right? The other part of it is the KBAs that individuals need to go through, the knowledge-based authentication questions that a lot of people have difficulty with, but all of that has to be tracked and then travel along with the loan file for the life of that loan file, right? And those become challenges. What we think is there is certainly a place for RON closings in the lending industry. It's likely to be more of an exception or certain types of loans that it's used on rather than wholesale across the board. But there's a consumer need for it. When you think about people that are overseas serving in the military, or that are maybe have health issues and aren't able to do something. But largely we're focused on, and what we set out to focus on was 99% of the market is in person. Let's focus on the 99%.
And to clarify, Margaret, right, there is no video with IPEN, so there aren't the concerns about where to store the video. No video, that's only with Ron.
Yeah, that's great. Super. Yeah, well, I really love the bridging. In other words, the fact that the current process is not disrupted and that they can incorporate. It almost sounds like it's almost white glove-ish, wouldn't you say? Yeah. That, in other words, it's, as we said before, you get all the benefits of the electronic, and yet you get the personalization of someone right there that can help you. Do you have any kind of fun examples for our listeners on when it's been used, and kind of fun success stories?
We do, and it varies on the type of lending institution. But some of the best ones that we've gotten feedback on is typically the first reaction is, oh my gosh, I've done everything electronic up to this point, and my parents or someone told me I was going to now have to go to the title company and sign 200 pages worth of loan documents. And they show up and they see kind of an elegant solution where they are still signing with their handwritten signature, at least in our case, but they're going through an electronic process. And that's what they want. They want to be there with the loan officer or with the title agent, and knowing these documents, having the ability to ask questions while they're there signing these documents, and celebrating that experience, which Amy can talk a lot about as well.
Yeah, we like to say, Margaret, that this is a great branding opportunity, right, for organizations, because they can say that they're tech forward and they can provide that white glove experience that you mentioned to the borrowers, right? Borrowers in every other aspect of their life are using technology. And so, as we mentioned earlier, we're applying technology to that process. So it's a great brand opportunity. But in addition to that, it's an opportunity to cut expenses. And we know all the lenders these days are out there pounding the pavement. Where's their next loan going to come from, right? Where can we generate more revenue? Well, when you look at the other side of things, this is how you can really cut expenses, because there's a lot of efficiencies gained when you close loans via IPEN. And so we like to say there's 5 key reasons that really both lenders and title companies are turning towards IPEN solution. And one of those is that they can reduce expenses, right? There's no printing of the paper, there's no toner, there's no shipping costs with FedEx. It reduces the errors at the closing table, and there's some safeguards we have built in so that there's no missing signatures on the documents. There's no cost to employ an FTE or a half FTE to go down and chase down missing signatures. The loans are very secure once the signed documents are completed. And the speed is a huge issue, right? As soon as that closing package is completed, signed, notarized, it's immediately back to the title company. There's no delay in it getting back to the title company, and then it can be back to the lender quickly as well. And then I know earlier Brendon mentioned kind of that ceremonial celebration, right? There's still that relationship management of the title company, the LO, the realtor, the borrower being at that table together in person. Like if we were all together, think of how much fun we'd be having, right? We'd pop the bottle of champagne, congratulations, get our keys. We still have the opportunity to do all of that in a celebratory manner. It's just everything's done more efficiently, safer, more secure, along with still being in person.
Yeah, that's so great. We always talk about efficiencies and cost savings because that's what we all care about. We always care about it, but this year in particular. And we had a guest on the podcast for another episode, and they said, meet your client where the client wants to be met. And so I love what you're talking about there. It's only really buying a house that we have gobs and gobs and gobs of paper. Everything else, there's no paper.
Exactly. And Margaret, the studies show that over 81% of borrowers still want to meet in person, right? So you talk about meeting them where they are. They still want to have that kind of maybe hand-holding or guidance or assurance, right? That everything's going correctly. They don't want to rely on their own technology at home, perhaps, right? Or maybe they don't have the technology needed. And so meeting them where they're at is, right, providing a tech-forward solution while still being right beside them.
Yeah, that's fantastic.
talking to a few lenders, they also like it because they may have not met this person to date, right? They applied online, they collected all their information online, and this is their one opportunity to really complete the relationship with them so that when the market turns, they get that refi business. If it's a bank, they're able to work with them on other financing, life financing issues that they go through, right? And that's why, some banks will use EscrowTab in their branches offices for HELOCs because they've traditionally always done HELOCs in the branch office. But they now get cost savings and efficiency out of that process while still bringing the customer to the bank branch office and signing loans with them. On the independent mortgage bank side, that might be the only time that you have a real connection with that customer. And even if it's through someone that's completing that signing on your behalf, it's still a connection point and relationship. So making sure that they have that experience that's happy and something akin to what they normally experience electronically throughout the rest of their life, it definitely helps close the next deal.
For sure. And no matter what, it's a relationship business. I mean, that's kind of the bottom line. Yes, we're trying to make it more efficient. Yes, we're trying to make it more cost effective. But the fact is that it's going to be one of the most important purchases that a family or an individual makes. And so how nice to have that technology and personalization. That's really neat. So as we come to the end of this episode, how does somebody sort of get started if they say, wow, yes, it's time we need to incorporate IPEN? What are the things that they should be thinking about? What are the standard practices? What would you advise them?
My first step would be, don't be afraid and assume that you have to have an eClosing team and that you're going to need lots of integrations and everything else. If you find the right partners, those will not be problems you as a lender should have to deal with, right? The second thing is, make sure that you have good communication with all the trading partners that you work with, because that will feed into your decision about where can I do this and when can I do this. But a lot of that logic and eligibility is wrapped up within our system so that it can make it really easy for lenders to move forward. So I think that the first step is just recognize that this isn't necessarily going to change a whole lot within your company, and it doesn't require resources. It can be done purely as I need to make sure that my organization, when volume comes back, doesn't have to really go out and hire 200 extra people. We can hire 100 extra people, and we can be much more efficient in that way, because no lender really likes going through the process that we just went through over the last couple of years, right? And rather than just throwing bodies at it, let's use technology wisely. Amy, were you going to say something?
Yeah, and I would just say, to add on to that, Margaret, they can start today, right? If they want to know how to get started with IPEN, look for an IPEN provider today, because it isn't something that you have to have a budget set aside for, or that you have to have prioritized with your IT team, right? We hear that a lot from companies who say, oh, well, I didn't set aside budget in 2023 for this, right? Or if I go to my IT team, they're going to tell me, good luck. We have things scheduled out for the next 3 years, or, just a myriad of excuses. Like, it's going to be super overwhelming for my team to hear about another piece of tech for their tech stack, right? But this is such a different solution, and easier to add, more cost effective to add without a lot of upfront fees and integration fees, that it is something that people can start with now and start saving money until the market turns and they can start increasing revenue.
Excellent. We love increasing revenue. Well, Amy and Brendon, thank you so much. I really appreciate personally the education on it, and I know that the listeners do as well on the whole IPEN. So thank you for that. And to all of our listeners, thank you so much for tuning in to today's episode. If you liked what you heard, please subscribe to the Mortgage Innovators YouTube channel or wherever you podcast. Until next time.